Try to do the following questions and check your level of knowledge. Model questions for exit exam. Financial Management 1. Part 1. 1. The primary goal of financial management is to A. Maximize profits. B. Maximize the current value of the company's stock. C. Minimize costs. D. Maximize sales revenue. Answer: B. Maximize the current value of the company's stock. 2. The function of financial management primarily involves A. Product development. B. Inventory control. C. Managing cash flows, investments, and financing decisions. D. Recruiting employees. Answer: C. Managing cash flows, investments, and financing decisions. 3. Which of the following is not a financial management decision? A. Capital budgeting decision. B. Working capital management. C. Dividend policy decision. D. Product design decision. Answer: D. Product design decision. 4. The process of planning and managing a firm's long-term investments is called A. Capital structure. B. Working capital management. C. Capital budgeting. D. Financial forecasting. Answer: C. Capital budgeting. 5. A key role of financial markets is to A. Manufacture financial products. B. Facilitate the flow of capital from savers to borrowers. C. Set government interest rates. D. Eliminate investment risk. Answer: B. Facilitate the flow of capital from savers to borrowers. 6. Which of the following is a primary market transaction? A. An investor sells shares to another investor on the stock exchange. B. A company issues new stock to raise capital. C. A bank loan is repaid. D. A bondholder sells a bond to another investor. Answer: B. A company issues new stock to raise capital. 7. A corporation differs from a sole proprietorship because it A. Has limited liability for owners. B. Does not pay taxes. C. Is easier to set up. D. Cannot issue shares. Answer: A. Has limited liability for owners. 8. A major disadvantage of a sole proprietorship is A. Limited access to technology. B. Lack of government regulation. C. Unlimited liability. D. Complexity of tax filing. Answer: C. Unlimited liability. 9. The most important function of the capital markets is to A. Facilitate day-to-day trading of consumer goods. B. Raise funds for long-term investments. C. Finance working capital. D. Provide government subsidies. Answer: B. Raise funds for long-term investments. 10. A money market primarily deals with A. Long-term securities. B. Equity instruments. C. Short-term debt instruments. D. Derivatives. Answer: C. Short-term debt instruments. 11. Which financial institution is primarily involved in underwriting and issuing new securities? A. Commercial banks. B. Central banks. C. Insurance companies. D. Investment banks. Answer: D. Investment banks. 12. Which business organization offers the benefit of double taxation? A. Sole proprietorship. B. Partnership. C. Corporation. D. Cooperative. Answer: C. Corporation. 13. The capital structure decision involves A. Managing daily cash inflows and outflows. B. Determining how to raise the long-term capital needed for the firm. C. Deciding on the product mix. D. Preparing the income statement. Answer: B. Determining how to raise the long-term capital needed for the firm. 14. The risk-return trade-off suggests A. Lower risk always yields higher returns. B. Higher returns can only be achieved by taking higher risk. C. Risk and return are not related. D. Investors should avoid all risk. Answer: B. Higher returns can only be achieved by taking higher risk. 15. Working capital management involves A. Deciding on long-term capital investments. B. Managing a firm's short-term assets and liabilities. C. Issuing new bonds. D. Deciding on dividend payouts. Answer: B. Managing a firm's short-term assets and liabilities. 16. The primary purpose of financial analysis is to A. Prepare tax returns. B. Evaluate the financial health and performance of a business. C. Record day-to-day transactions. D. Minimize expenses. Answer: B. Evaluate the financial health and performance of a business. 17. Financial ratios are primarily used to A. Compute payroll taxes. B. Prepare financial statements. C. Analyze relationships between financial statement items. D. Predict economic conditions. Answer, C. Analyze relationships between financial statement items. 18. Common size financial statements express each item as a percentage of A. Retained earnings. B. Net income. C. Sales or total assets. D. Total equity. Answer, C. Sales or total assets. 19. Liquidity ratios measure a firm's ability to A. Pay long-term debt. B. Generate profits. C. Pay short-term obligations. D. Issue new stock. Answer, C. Pay short-term obligations. 20. The current ratio is calculated as A. Total assets for total liabilities. B. Current liabilities for current assets. C. Current assets for current liabilities. D. Net incomes for total equity. Answer, C. 21. The quick ratio excludes which of the following from current assets? A. Accounts receivable. B. Cash. C. Inventory. D. Marketable securities. Answer, C. Inventory. 22. Which ratio measures how efficiently a company uses its assets to generate sales? A. Debt to equity ratio. B. Return on assets. C. Inventory turnover. D. Gross margin. Answer, C. Inventory turnover. 23. A high debt to equity ratio indicates A. High profitability. B. High liquidity. C. High leverage and potential financial risk. D. Strong market position. Answer, C. High leverage and potential financial risk. 24. Return on equity, ROE, measures A. Profitability relative to sales. B. Profitability relative to shareholder investment. C. Liquidity position. D. Market valuation. Answer, B. Profitability relative to shareholder investment. 25. Trend analysis involves A. Comparing financial results to competitors. B. Analyzing changes in financial data over time. C. Comparing financial data across industries. D. Preparing pro forma statements. Answer, B. Analyzing changes in financial data over time. 26. One of the main limitations of financial statement analysis is A. It only applies to manufacturing firms. B. It excludes cash flow data. C. It relies on historical data, which may not predict future performance. D. It ignores operating expenses. Answer, C. It relies on historical data, which may not predict future performance. 27. Comparing ratios of firms in different industries can be misleading because A. Ratios are always inaccurate. B. Accounting principles vary significantly between countries. C. Industry characteristics affect appropriate ratio levels. D. Inflation affects all ratios equally. Answer, C. Industry characteristics affect appropriate ratio levels. 28. Window dressing in financial statements refers to A. Changing accounting standards. B. Reducing long-term debt. C. Manipulating financial reports to make them look more favorable. D. Auditing the financial statements. Answer, C. Manipulating financial reports to make them look more favorable. 29. The use of different accounting methods, example FIFO versus LIFO, across companies can A. Improve liquidity ratios. B. Distort comparability in financial analysis. C. Lower financial risk. D. Always increase net income. Answer, B. Distort comparability in financial analysis. 30. Vertical analysis is performed by A. Comparing each item to the same item in a previous year. B. Expressing each item in a financial statement as a percentage of a base amount. C. Analyzing competitors' market share. D. Forecasting future earnings. Answer, B. Expressing each item in a financial statement as a percentage of a base amount. 31. What is the primary purpose of financial forecasting in corporate finance? A. To predict stock prices. B. To comply with regulatory requirements. C. To estimate future financial performance and funding needs. D. To calculate tax liabilities. Answer, C. To estimate future financial performance and funding needs. 32. In the percentage of sales method, which of the following accounts is typically not directly tied to sales? A. Cost of goods sold. B. Accounts payable. C. Fixed assets. D. Selling expenses. Answer, C. Fixed assets. 33. A firm's sustainable growth rate is most closely related to A. Return on assets. B. Debt to equity ratio. C. Return on equity. D. Current ratio. Answer, C. Return on equity. 34. Which of the following is typically assumed to remain constant in the percentage of sales method? A. Net income. B. Depreciation expense. C. Sales growth rate. D. Dividend payout ratio. Answer: D. Dividend payout ratio. 35. What does a positive external financing needed, EFN, indicate? A. The firm can finance growth using internal resources. B. The firm has excess cash. C. The firm will need external funding to support its growth. D. The firm should reduce its dividend payout. Answer: C. The firm will need external funding to support its growth. 36. If a firm's growth rate exceeds its sustainable growth rate, what is the most likely outcome? A. The firm will accumulate cash reserves. B. The firm will reduce its debt. C. The firm will require external financing. D. The firm will automatically increase profitability. Answer: C. The firm will require external financing. 37. The formula for sustainable growth rate, SGR, is A. Rho times 1 minus dividend payout ratio. B. ROA times total asset turnover. C. Net income divided by total assets, times 1 minus debt ratio. D. Rho times dividend payout ratio. Answer: A. Rho times 1 minus dividend payout ratio. 38. In financial forecasting, a spontaneous liability is A. A liability that grows at a fixed interest rate. B. A liability tied to changes in sales. C. A liability determined by management discretion. D. A long-term bond issuance. Answer: B. A liability tied to changes in sales. 39. When using the percentage of sales method, retained earnings in the pro forma balance sheet is forecasted based on A. Projected dividends. B. Projected net income and dividend policy. C. Increase in sales only. D. Historical retained earnings. Answer: B. Projected net income and dividend policy. 40. A firm has a projected sales growth of 10% and a current profit margin of 5%. If it retains 40% of its earnings, what is its sustainable growth rate? A. 2%. B. 5%. C. 10%. D. 2.5%. Answer: D. 2.5%.